You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from theoptionsinsider.com and co-hosts, Uncle Mike Tusaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi, and Mark the Greasy Meatball Sebastian from OptionPit.com.
All right, everybody, that rockin' tune means it is time once again for the option block, everyone's favorite. I know it's my favorite. Hopefully it's yours too. Favorite bi-weekly show for all things options related. A little bit of wit, a little bit of wisdom, a little bit of earnings analysis. Certainly got a little bit of that going on today. A little bit of some unusual activity, some education, some strategy. Put it all together in the swirling cauldron that is the option block. My name is Mark Longo from theoptionsinsider.com, as well as from the ever-expanding, ever-exciting Options Insider Radio Network. No shortage of ways for you guys to find that quality options radio goodness, including the mothership, theoptionsinsider.com. Surf on over. If you can't find it, where's that radio stuff? I can't find it. It's easy to find. Top left corner, click on the Insider Radio Network tab, and your adventure has begun. And of course, if that's too much, maybe you like using some external services, iTunes, Stitcher, what have you. Maybe you're a Pocket Cast guy, Downcast, whatever you like. We're available in all of that as well. Just search for our stuff in those stores. And if all of that is just too much effort, you really can't be bothered, then by all means, just grab our mobile app, iOS, Android, even the Fire OS. It's available on all of the platforms. We pretty much put it out everywhere you want to hear us, even perhaps a few places you don't. Make it available for you. And of course, while you're streaming, while you're downloading, make sure you fire out those questions, those comments. We love to hear from you guys. And joining me on the old program today, starting off, beaming in from the Option Pit World HQ, which could be downtown, could be out in Riverside, in the burbs, could be anywhere. We don't know. We'll find out where it is today. The greasy meatball himself, Mr. Mark Sebastian. Mark, welcome back to the program, sir.
It's a scenic day in Riverside. The sun is shining. The trees are out. Children are laughing and playing. What a day. Things are good. Good to see you. Good to hear from everybody. Hope we're all doing well.
Well, if you're seeing me, then you have secretly implemented that camera you've always been threatening to do in our studios here, in which case...
Indeed, I have.
In which case, my lawyer will be contacting you forthwith, sir.
I apologize.
All right. We found out where the secret floating world headquarters is today, listeners. It is out in the suburbs known as Riverside. Speaking of the suburbs, certainly not as scenic and lovely and tropical as this next burb we are headed to. Of course, it is scenic and lovely St. Charles, Illinois, where it's always a balmy 72 degrees and sunny, where we are joined by Uncle Mike Tusaw from RCM Wealth Advisors. Uncle Mike, welcome back to the program. Thanks for beaming in once again from that lovely burb known as St. Charles.
Oh, we love it here. And then you know what? I think you should, the fact that even though Mark still has the secret camera in your place, he did apologize just a second ago. So you shouldn't have your lawyer call him because he said he's sorry.
Exactly.
Problem is I have that guy in retainer, so he's got to do something. So he might as well go after Sebastian, you know, and then we'll switch it around. You'll offend me next week. You got to keep the guy working, right?
That's true. You can make a lot of money suing people these days. They should have options on lawsuits.
Yeah, that's not a bad idea. We shouldn't say that.
They do have options on lawsuits.
We shouldn't say that too loud. Someone might hear us and get a bad idea.
I actually believe they do have those where you can get a loan. Like there are these groups that will. It's not a lawsuit, but there kind of is an embedded option where they basically will amortize your lawsuit, and then you keep the money even if even if you lose the lawsuit, and they get all the upside. So I believe they do essentially trade call options where you can sell a call option in your lawsuit. So,
I thought you were going to say some obscure binary on, will they, won't they sue or something crazy like that.
Basically, if you think about it, it's basically a call option, right?
Sounds like it.
I will sell you my lawsuit and you'll give me X number of dollars. I mean, that is a call suit. That's a call option.
There we go. Covered calls in litigation. You never thought you'd see the day, listeners, but it is here, and perhaps a little bit frightening. Before we go any further down that frightening rabbit hole, let's pivot and turn directly into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody, welcome to the trading block. You guys know the drill by now. This is the portion of ye old program where we break down what's moving, what's shaking, what's catching our eye in today's activity. Mostly red on the screens today. We are recording this on Monday, April 27th for all of you playing the home game right after the close. So we're in the teeth of some good stuff about to come out. But like I said, most of the major indices off about half a percentage point or so. The S&P leading the charge to the downside, about a full half a percentage point to the downside. Q is about little less, about 0.4 of a percentage point in the Dow. The laggard to the downside, so perhaps the leader of the group, only down about 1/3 of a percentage point. VIX cash on the up move, up about a little over a handle, 1.1 handles to over into the 13.4 range or so on VIX cash land. But I know what a lot of you are tuning in for, what a lot of you are interested in. Certainly Uncle Mike is interested in today. It is indeed time for ye old fruit company to report their earnings. And if you were paying attention today, as you probably were, a lot of you out there love to sling Apple. We know just from the numbers of the show, let alone the website, and of course from all the brokerage volume. Apple, a big driver. Apple, of course, rallying pretty hard today, up about 1.5%, a little over 2 handles to right about 132.5. Today, as that at the money straddle went out right around a little over $7, about $7.20 or so. So predicting right around about about 5.5 percentage point move in the intraday, in the after hours here, about 5.5%. Pretty robust day, as you might expect. It's been averaging a little bit shy of 1 million contracts a day of late, so still robust in an environment when VIX can't even break 300 most days. It's been averaging about 100 or 1 million a day. Today, doing well north of that. When I put together show notes earlier today, when we put them together, we guessed about 1.4 for the closing number. It's actually closer to 1.7. So really just an aggressive day from an options perspective. Overall, as you probably may expect, leaning a bit to the upside, 2-to-1 calls over puts, though the breakdown of that might surprise you a little bit. There was pretty much about even numbers percentage-wise and overall contract volume-wise from the percentage of calls sold on the bid versus those lifting offers out there. So not as many, perhaps, Apple zealots as you might expect. Usually you see that number strongly to the upside of people lifting offers, getting close to that in the call range. Not so much today. In fact, the net delta is short about 300,000 deltas on the day, which is interesting, showing perhaps that people may be leaning a little bit more aggressive to the downside. Same thing with the puts, about a roughly even breakdown, about 31 versus 32% of people hitting bids versus lifting offers on the puts as well. So a pretty surprising breakdown today out there in Apple land. Uncle Mike, A, does any of that surprise you? And B, tell us how you're setting up, what you're preparing for, what you're doing out in Apple land ahead of this big quarterly announcement for you.
Well, a couple things. I think that the reason that we're not seeing such the Apple fervor or such the Apple zealot buying, so to speak, is because of the fact that me being the Apple zealot that I am, clients have done pretty well with it over the course of the last year or so. And so this is one to where even I'm looking at this right now to where, is the iWatch going to get Apple up to the $1 trillion mark? I don't think that's what's going to do it. Does the company have strong fundamentals, though? No question about it. It's a great company. It has a lot of great things going for it. But let's face it, it's right at its all-time highs. I'm looking at an after hours right now. It's about 50 cents below its all-time highs as we broadcast. And because of that, the fact that today we keep we're right below the all-time highs of Apple. We couldn't break through the all-time highs of Apple. I think that's going to be, I'm not necessarily, that's something that could be a big roadblock for Apple, is that number, just because it's the all-time highs. What I did going into today, I don't have near as much exposure as I had to Apple a few weeks ago. And so my official stance on Apple is that I would not, and I'm going on record, I think I went on record last week, but I want to go on record now, I would not get into Apple right now as a new position. If you have it as a position that you've had some profit on, then perhaps do some collaring, do some, maybe start taking some profits, something along those lines. But I would not enter Apple right now as a new position, just because of the fact that it has had such a run up. Now, if I'm wrong and Apple goes from 133 to 200, hey, I'll be wrong. That's fine with me. We've done pretty well with it. But for the time being, what I'm doing, at least going into today, for the clients that I already have in Apple, we are actually long. We're long the shares of Apple, obviously. And then for the 100 shares, we are also long a May week 130 put. And to finance it, what we're doing is we sold a May week 135 call. Now, with that and looking at that, that's pretty much the costless collar. But with that being said, I just couldn't resist. I bought a 138 call just
I was just going to say, I knew you had to pick something else up there. There's no way you just went out naked short a call to the upside. No way. No way, sir.
So we do have that going. So we have instead of doing a collar, we're doing a collar with a call spread. So the time decay risk on this is probably a little over $1, I would say, just based on how we got filled on this. And if Apple's a resounding meh, then that's what happens. If Apple goes to the upside, then, well, we'll miss out from 135 to 138. And quite frankly, I'm fine with that. And if Apple goes down, then by gosh, I am a genius. So that's kind of where we stand with Apple at this point. Once again, I think it's a good fundamental company, but I just have a hard time buying into it. The fact that at these price levels right now, if you already have it, you can work hedges on it. You can do what you want to do with it. But I would not get into it as a brand new position right now.
There you go. Strong words from Uncle Mike. He perhaps our most devoted of Apple zealots here on the program. Right in that call at the 135 line, perhaps expressing some underlying sentiment there. At 135, you're willing to get back on the sidelines, perhaps, before the devil on your shoulder started whispering and said, pick up the call, pick up the 138 just in case.
Oh, I'll roll it up.
Yeah, you would never let it go. You'd roll it. You would.
But I would not, for new clients that are coming in, I'm not putting new clients that are coming in into Apple right now. So that I can say.
Wow, that's probably the first time since you've been doing this show, probably, right? Except for the one time when you sold it. That was it.
Except for the one time when we sold it at 620 the first time. So.
Wow. So that is in and of itself. What are you going to do with yourself? You have to find another position to manage all day.
I don't know. Maybe I'll actually go out and buy an iPad or something and see how they actually
all the fuss
work.
is about. Yeah, you're right. Interesting stuff. Mr. Sebastian, I'm sure the Apple talk was hot and heavy in the pit chat today. What's catching your eye out there?
Yeah, we were playing around with it today. It was interesting seeing people be like, could Apple go to 150 after the close? And trying to explain to people, I'm like, that would mean that they have to that would be basically a 20% increase. So we'd be talking a $170 billion of market cap after the close. And I was like, I just don't see that happening. If I was going to do anything, I'd fade it here. But I did play, I was just looking at it. I was playing around with a little bull broken wing butterfly for a credit so that I would, if it went down or up mediocre, I could make some money. It was just kind of interesting. That's just in my little personal account. Nothing, and really just to watch it. But that was really all I was looking at. The vol pretty high today. But lots of other players coming out today as well. It's not just Apple. There are other companies reporting, believe it or not. But we did have a nice, fun, long conversation about Apple. Cheapest Apple Watch is $550. You know how many nice watches you can buy for $550? And the fact that you still need to carry your phone. I mean, I don't know who's buying this thing, but they're crazy.
I think I can get one for like $3 something.
I did not see one on the website, but
they may be sold out of that cheaper one. I know they have limited versions. Maybe the only one you can get now. You're right. It's not like you're falling off your desk.
Nope, I'm fine. I'm fine.
Getting tackled in your office there. But you're right. Things are a little pricey not just from a watch perspective, but from a vol perspective. A lot of broad outlets writing us up this week, of course, about what's going on out there in Apple vol as well. Bloomberg had an interesting take on it, looking at it compared to NASDAQ. Of course, they also quoted the Apple VIX, which doesn't really get a lot of love. The only time we really used to hear about Apple VIX was when Alex would be on talking about his idea generation machine there for OX, of course, and they use the internal VIXs there. That's pretty much the only use case we ever saw for it. But of course, looking at Apple compared to the NASDAQ 100 vol, which of course they also have volatility indexes on, about a year and a half out there. So a lot of earnings fluff being pulled into that. The Apple VIX in and of itself about 2.5 times the level of that old NASDAQ VIX as well. The highest it's been when you're looking at ratios, all those out there who like to look at ratios, since October of 2013, so well over a year ago now on that front as well. So interesting stuff out there from an overall perspective. Of course, Mark's right. A lot of other people out there playing as well, and a lot of other names getting a lot of attention from an overall options perspective as well. There's been a lot of talk about what's coming up next week as well. We're seeing a lot of big players coming up later and early next week in the healthcare realm. So there's been a lot of flow out there, as you might expect as well, but perhaps not the direction you'd expect, not the upside speculation we traditionally would see in a name like Apple. Though, like I mentioned, Apple a little bit less on that today as well. It's actually been a lot of, looks like, hedging activity out in that realm, particularly in some of the broad ETFs that track that sector, including, of course, the Spider Select Healthcare ETF, a very popular one. We're seeing a lot of love in the puts. The ADV out there in the puts gapped up almost 2x. Pretty much for coming into this recent time frame here. And for every call open, there's 4.6 puts. So a bit of reverse of what we typically see in a lot of these names, where the calls usually outnumber the puts by a substantial margin. Not so much the case out there in the Healthcare Select Spider. 4.6 puts for every call out there. For those of you out there, again, who like to track ratios and historicals, that is the highest since beginning of 2007. So essentially, since we launched the Options Insider and the Options Insider Radio Network, that is the highest they've ever seen for that. All that data, of course, coming from our friends over there at Trade Alert. Mark, I know you like to look at the healthcare sector every now and then. Does that preponderance of puts, try saying that 5 times fast, does that surprise you at all?
Well, maybe it's ahead of this Obamacare thing. They're still going through all that stuff. So, I think that's going to be maybe that's what's driving stuff.
Wouldn't surprise me. A lot of stuff kicking off in that neck of the woods. A lot of those names have also had a bit of a rally of late, so they're trying to perhaps hedge some of that as well. Speaking of rallies, I know, Mark, you and Andrew were talking about this recently. A lot of people have been focusing in on this. What's been cooking over there in the China realm as well. A lot of these Chinese stocks have done extremely well. We, of course, have lamented here on this program the lack of direct ways to really play those, aside from some of these really broad-based ETFs. Well, people, not surprisingly, have been looking at what's been going on in the options on a lot of those broad-based ETFs, including the iShares China Large Cap ETF, one of the largest ones out there, about $7.4 billion going on in that one. And, of course, that one's had quite a rally just in the past month, up about nearly 50% in terms of the actual put volume we're talking about out there. So a lot of love out there in the puts for the Chinese names as well. But interestingly enough, also some love for the calls. So a little bit of a bifurcation out there in the paper. Also seeing in some of the other ETFs, the Deutsche X-trackers Harvest CSI 300. Say that 5 times fast. China A-Shares ETF also doing well as well in terms of the overall volume, particularly from a put side perspective. About 92% increase for the put love out there. Calls getting still impressive 71% as well. So pretty much love across the board for what you're seeing out here in the Chinese names, but heavier on the puts than we're seeing on the calls, because pretty much most of the names you're looking at, most of the broad-based ETFs, have also, from an underlying performance perspective, done fairly well, up sometimes 20% or more in some of those cases, some of those in this last month or so. So it's been rally-ho out there in China, and of course, rally-ho from a volume perspective, particularly from a hedging perspective out there in a lot of these Chinese ETFs Sebastian, I know you guys were talking a lot about the vol out in these names, particularly the realized vol we saw exhibited a few weeks ago in some of these names. Are you still watching what's going on out there, and you've been recommending any plays out there to your pit chatters?
I'm not, but that EWT guy made a lot of money in a very short period of time. Good trade by that guy, and we've been seeing all the Asian stocks are flying around. So that's been a fun little thing, because the part that's scary is, like, not only are the markets actually moving around, but the currency is moving around at the same time. It's got all these pieces working interchangeably. So I totally understand why someone would move from the long vol perspective.
Yes, it certainly seems like an interesting play out there. Speaking of EWT, since you've invoked it, we might as well jump right on into our next segment. Yes, it's time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
Listeners, welcome to the Odd Block. This is indeed the portion of the program where we break down the weird, the wild, the wondrous. We'll keep an eye on Apple, let you know as it reports and what's cooking out there and what we're seeing out there. But for now, we're going to dive right on into the weird, the wild, the wondrous paper that we're profiling here in the Odd Block. And as Mark alluded to, going to kick things off with a friend of ours, perhaps doing well, taking some money off the table out here in EWT. This is indeed the iShares MSCI Taiwan Index ETF. Of course, ticker symbol EWT, closing today right around $17 even or so, up about 20 cents on the day. This is the name that does about 3,400 contracts a day, doing well over 10x that, 36,000 contracts going up today. So just size paper, however you want to describe it. In this name, you pull up the options chain for this one, listener, and it just jumps off the page at you. There's a handful of trade and some other strikes, and then one massive strike just lighting it up. And what caught our attention was initially a one massive block of 22,900 of the May 17s going up, paper selling for 31 cents. As the day continued, another about 7,000 or so went up to the tune of just a hair under 30,000 total going up on the day on the strike. This is all, on open interest of about 39,000 contracts. So if that's still our friend out there, then he might have a few more to go. It seems like this is indeed some profit taking. As Mark was alluded to earlier, this is a pretty good run for this one. If you've been following this name for a while, you know it's at an all-time high. And again, it looks like he's closing out a serious chunk of the open interest, only about 10,000 left to go. So if this is the same guy, he probably is going to maybe come in for the remaining kind. If you remember on our unusual activity, we don't just profile the crazy losers and the whack jobs. We do a lot of that as well. But we also have some winners lurking in there every now and then, including this one. Our friend picked these up back on April 23rd, so not that long ago, listeners, about 4 days ago. And here we are talking about a close now for about 20 cents or so. So not a bad do, as we used to say there on the old floor, for 4 days, 20-odd cents, about nearly 30,000 times. I think I would take that. Mr. Sebastian, I believe you would take that as well.
Yes, I would. That was an interesting one. When I saw that go up, I go, wow, they made a quick buck quickly. So that was a nice little trade. Good work. Kudos.
A nice 600,000 or so in your pocket, a little bit less. Hey. You didn't get exactly 20 cents. You got close to it.
Yeah, it's a real nice trade. And I think he left a little bit on. So,
it looks like about 10,000 still left on.
Left himself, because he did a little bit more that day. So I think he basically locked in a pretty nice profit while giving himself a little bit of a continued upside.
Makes sense. He's got a little bit more room for these to run. I think worst case, he can probably scratch them if the stock doesn't go his way recently.
He's going to be able to. He'd have to royally screw up not to get a quarter out of those.
Yeah, and you're right, and that's another talking another 15 or so cents, another 10,000 times. That'll do. That'll do for what ails you for a quick hit there. So
good work. Kudos.
Yes, we don't
Drinks on you, bud.
We don't often say that on this segment of the show, but yes, indeed, well done. And
meet each other If I meet that guy in a cocktail bar, he is buying me my Manhattan cocktail.
We should do that. We should put out the call to the people we profile. Maybe they don't want to appear because obviously we besmirch them quite a bit. But the winners may want to come on and buy us a beverage or two to celebrate.
Yeah, tell you what, EWT guy, if you reach out to us and you tell me, hey, if I was the EWT guy, and then you bring in a sheet that shows us, I'll buy your Manhattan cocktail.
There, that's an offer. Mark does not open the wallet very easily or readily, so take advantage of that. Mr. EWT, or perhaps Mrs. We shouldn't discriminate.
That's true. But yeah, no. In the words of Mike Ditka, I flip nickels like most men flip manhole covers.
Well, there you go. I'm sure that's one of his more famous sayings, of course.
It is. Well, he was describing George Hallis.
I gotcha. But indeed,
Bear Hallis, if you
our friend here doing pretty well. We kind of gave him free advertising. We're showing what a great trader he or she is. So he might want to buy us a beverage or two, or perhaps a steak with the beverage. I'll wrap those two together. I'm just putting that out there. Anyone listening, by all means, take us up on that as we move on to our next name here. I love these ones that have the name and the ticker so harmonious. This is Joy Global Inc., of course, a name we refer to frequently on this network and we check pretty much every day. It's right up there with the Apples and the Amazons and the Googles and the Facebooks. Of course, you have to add Joy to that list because it's one of the big players out there, really. Ticker symbol JOY, Joy, of course. Closing today, $42 about even, up about $1.50 or 3.6%. So a fairly robust day for good old Joy. As you might expect, that also translated into the options volume. This is the name that does about 1,800 contracts on a given day, doing about 21.5 today. So very, very robust volume. And as we started off the day, we started profiling some, as you might expect, given the relatively substantial move in the underlying, some upside call love. In particular, it was, let me just scroll down here so I can find it. There we go, listeners. The May 42s is what started the rampage. We saw a block of 2,000 of them going up for about 94 cents. Paper buying up there on the ISE. As the day went on, quite a few more piled into the tune of about just a little under 5,000 total on that strike. We also saw the 42 halves going up here as well, total of about 3,000 on that strike. Also, paper buying. Looks like we dig into these are both marked as spread, but they weren't legging into a 50-cent call spread. No, it looks like they were doing the old stupid. This one, compared to some of the other stupids we talk about, Mark, may have a little bit more credence to it. You can see this guy obviously chasing this name a little bit, trying to get in on it, maybe missed it on the 42s, diving into the 42 halves. Only a half a strike difference. It's not that big of a deal. If you have to put on your trade on one strike and the half a strike away, it's not the end of the world. Chasing it, you miss it, you get one here. But Mark, we talked a little bit earlier, you and I, some interesting discussion on one of our other programs about positioning for stupids, and I've always argued against stupids, except for that one case, kind of like this, where there's momentum working in your favor and you need to leg into them. You made a case I could maybe see a bit more of an argument for. Why don't you relate what you were telling me to the listeners and what we were discussing last week about why you think someone may want to put a position on where they split it across a couple of strikes as a way to get maybe, in that case, I believe it was a put stupid, so they're looking to get long deltas with the stock.
Yeah, so what the reason why you do a put stupid is that what you're actually doing is creating a strangle out of it. So most of these, especially put stupids, and they're almost always attached to the opposite underlying. So if I do a put stupid where I buy at the money puts and then I buy out of the money puts, and then one up. So I'm long a million. Let's say I'm long 100,000 shares of XYZ stock, and then I buy and then I put that up against 1,000 at the money puts and then 1,000 out of the money puts. What I'm really allowing for is my stock to still have a delta to it, but I've now created something that has some downside protection. So for instance, if I'm long 100,000 shares and 1,000 at the money puts, I've got I basically have no delta, right? Or I can be long 50 deltas or something along those lines. Then if I put on the out of the money, that'll actually then allow for it to be to have a short delta or a long delta. So it's really about positioning. is really what you're creating.
But you could play with that too by doing fewer of the main strike or adjusting the ratio with the stock
or
as
fewer
well.
of the more, or against, or maybe I'm long 200,000 shares, and I do 100 and 100, and it creates this strangle price. So there's all sorts of different reasons for doing it, but it's almost always associated for stock, and almost always synthetically turns into some sort of strangle.
I mean, I've heard a lot of different people try to justify strangle positioning at the outset to me over the years, including the fact that they think it somehow mitigates the market impact, which I think is demonstrably false. But of all the arguments I've seen, again, there are reasons why I could argue against what you just said too, like we just did. But overall, it's probably one of the more sensible I've seen of the bunch. If you don't want to do it on the same strike for whatever reason or adjust with the ratio of stock, you can split it up across multiple strikes. It makes a little bit more sense. I still am in favor overall of the inertia, the momentum strangle, if you will, like this versus others. But there's room for divergent opinions as we move on into our final victim, our final name, our final celebutante of the segment here. This is good old DirecTV, my former cable provider, up actually about unched on the day, about 30 cents or so to about $90 and a little bit of change out there. Of course, ticker symbol DTV. This is a name that does about 2,000 contracts a day, doing about 10,500 today. Fairly sizable paper, and pretty much all of that 10,000 coming. Let me pull it up here for yes, exactly 10,000 of that 10,500 coming in one massive put trade. A 10,000 lot of the June 60 puts going up for 6 cents. Yes, you heard that right, listeners. 6 cents, 10,000 times, one block on the ISC. We don't really know. We didn't see any stock going up with this. Of course, it's such a way out of the money. I guess that 60 strike, the thing's trading 90. So these are not exactly high delta puts. Again, this is about pretty much a 50% cut. This would have to be roughly a little bit less here in good old DTV for these puts to really start paying off. Mr. Sebastian, what's your take on our friend here? Playing far from the at the money here in some puts in DTV.
I hear June puts. Just, I was thinking about when you said 6 cents, it sounded like 6 cents.
Now I see where you're going with that. That's a more recent reference for you. That's not like beyond 1989.
It is. I'm only off by a decade.
You threw me with that.
Go me. I was actually in school when they were filming that movie as I think about it. There's been a lot of these little out of the money puts trade, and the risk reward there, maybe just somebody has some, but maybe it's a bond hedge or something like that. There's all sorts of reasons to do something like that. But usually when you see way out of the money stuff like this trade, it's a lot of times more associated with credit than it is with some sort of equity position.
Well said, sir. Looks like the Apple numbers are indeed out. Stock's up and running quite a bit. So what a perfect time to dive right on into our strategy block.
It's time to dispense options wit, wisdom, and education. It's time for the strategy block.
All right, as I alluded to, the Apple number does appear to be out. Stock is rocking and rolling. Got about as high as 136 in the after hours, trading around 135 right now. Got down as low as about 120, just a little bit under 130 as well. So a wee bit of vacillation as to be expected here in the after hours. Again, I said they were pricing in about a 720 or so move, about a little over almost 5.5% move here in the after hours. And so far, we're getting some decent rocking and rolling. Uncle Mike, what's your take on what you're seeing so far? And does this have anything to do with your strategy block, or are you going in a particularly, completely unrelated direction? The floor is yours, sir.
Somewhat, just in terms of like what's happening right now. Apple closed today at 132.65, and right now, as I'm looking at this on the real time, it's at 134.12. So this is not the Apple of old in terms of movement after earnings. It's at least so far today, it has not been. As a wise man would say, this has been a resounding meh so far with in terms of price movement. What I do want to talk about today, though, is a way with which I think you can hedge some stock positions going into earnings. And this is an Apple strategy of old. It's not one that I did today. This is one of old that I used to do, and I talked about on the show quite a bit on the first run up to the 700 level. When Apple had very cheap volatility, which right now you can argue and make a case that a lot of stocks in this market have very cheap vol, what I used to do is hedge it with somewhat of a back spread, in that, let's say that XYZ stock is trading at $50 a share. What I would then do as a hedge, you have a lot of ways with which you can do it. Buying the put, that's what acts as your hedge. You're not responsible for protection to the downside. The put that you buy is. What you're responsible for, if you're a hedger, in my humble opinion anyway, is financing the cost of that protection in one way, shape, or form. Now, when Apple had low volatility, and let's go back to XYZ stock again. XYZ stock is at 50, and let's say that we believe that volatility on XYZ stock is very low. And with that being said, I also want to clarify something in terms of volatility being low or volatility being high. Volatility is low if you think it's low. Volatility is high if you think it's high. There's no such thing. I remember like a lot of times when I would talk to people doing live seminars, you'd hear people saying, oh, well, this is a high volatility or this is low volatility. Well, not necessarily. I remember one of my favorite stories is I remember when the VIX first went to the 39 level, just almost missing my plane from people wanting to know how they could actually short the VIX. And then the VIX eventually went up to 80. And that was back in 2008. So with that, step one, you determine that volatility is low. You go ahead and you buy your put. And you buy the 50 put, the 48 put, whatever you decide to buy. The upside of it doesn't necessarily have to be selling a covered call. It does not have to be the traditional collar on it. You can do a variety of things on it. But what I want to talk about today is something that I think could be applicable to a lot of stocks in this market. For me personally, not Apple right now, but for a lot of stocks in this market, if you feel that you have low volatility and you're concerned going into earnings over a stock that you own. What you can do for the upside is simply buy a call spread. So the XYZ stock is at 50. What you can do is buy a put and then buy a bull call spread. Now, what you're doing is you're buying premium as a hedge. The put option is the hedge. And let's say the stock goes to zero in theory. Well, if that's the case, then you're looking good. And the only loss that you have is on that call spread with which you bought. But let's say that it goes the opposite way and the stock goes way up. Well, what you need to count on then is the gain from the call spread financing the loss on the long put. So once again, this is something that only works if you have low volatility and you're expecting a large movement one way, shape, or form. This is something I used to do all the time with Apple. Sometimes I do it as just a straight call back spread. I know we've talked about call back spreads and front spreads on the show. I would do it in different ways, but in its simplest form, what I think could be a very good tool for a lot of people, a lot of our listeners right now, if you are looking to hedge a stock going into earnings, is just simply buying a long put and then buying a call spread to finance that put. If you believe the stock can go either way, you just don't feel comfortable in terms of determining a direction, and maybe you have a nice little profit on the stock to where if the stock does just sit there and you lose on the premium, who cares, because you had a nice little profit. Maybe it's time to move on after the earnings and you just couldn't quite get out of it because you wanted to play the earnings. And that is the strategy block for today.
Thank you for that, Uncle Mike. And because we still have a few minutes cooking here, I want to make sure you guys get some love. It's not just on Thursdays that we give you guys the love. We give you guys the love every episode here, and we're going to do it again on Monday's show with a very special segment of the Mail Block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, you guys know the drill by now. This is the portion of the show where you guys get to tweet in and email in and post comment in and pretty much any other way you want to get a hold of us. Of course, you can hit us up on the website, post a comment, or use the website feedback form there. Probably one of the easiest ways to get a hold of us. Just put question or comment for whatever show you want to write in for in the subject line so we know where you're referring to, or via Twitter, twitter.com/options, facebook.com/theoptionsinsider, or even stocktwits.com/optionsinsider, all the various social media media platforms, or to hit us up the old-fashioned way, questions at theoptionsinsider.com. Again, we just ask you to put somewhere in that one question for option block or something so we know where to route your question. So, and of course, all of that's too much for you. If you have the iOS version of the app, you can write in directly via our app as well. So no shortage of ways for you guys to dive in here on the old program. I'm going to kick things off with a question coming in from about listener goes by the handle Cab65, and he or she writes frequent type of question. We get at least a theme here about account sizes. What account size do you recommend to sell wide iron condors? So again, fairly frequent question. Account sizes. People love their iron condors. People love to short their iron condors. So this is not an infrequent topic for us. He doesn't give us much specifics beyond that. It just says wide. So then again, when you're thinking wide, you're thinking selling a lot of relatively expensive stuff near the guts and buying stuff farther away. So that could be that way, or you could be widening it out far away from the at the money as well. You can kind of mean wide a couple of different ways with an iron condor. Either way, I think the starting point for all these conversations about account size, we've said this before on the show, and it varies depending on broker, but it's somewhere around that $100,000 level. If you can get there, I know it sounds like a lot of money, and it is, but if you can get there, the switching to portfolio margin treatment is definitely an option, pun intended, you want to ask your broker about. And again, it varies by the broker. Some's 125, some are different levels. But once you have that level in there, you should definitely contact them and see if you qualify or what else you need to do to qualify. There may be some sort of trading threshold you have to hit as well. But definitely you want to start doing that, not even for iron condors, just in general, the benefits you'll get from that of treating your offsetting positions like actually offsetting positions. You will have a demonstrable benefit in your account, much more trading power. You'll be able to do more trades as a result, which is what you want to do at the end of the day. So I think regardless of that, you probably want to start there. We'll start, maybe Uncle Mike, we'll start with you. Anything else you want to add to our friend here in terms of what account sizes he wants for iron condors?
Okay, really, in the day and age with which we live for trading, we have the ability to do a lot of things because of the commissions being much less. For example, at RCM, what we pay is 35 cents a contract at TD Ameritrade with no ticket charge. So in theory, if I wanted to do a one-lot iron condor, I could do it for my clients at 35 times 4, that comes out to $1.40 per side. And so it's one where if you have a stock or if you're just doing something like that on SPY, you could do it with a few $100. Now, I usually wouldn't recommend doing that unless you just have that as maybe a portion of your portfolio as like your fund money or something like that. But I think that what's important is that you look at your overall picture as well. If you're looking to, if $100,000 or $125,000, and at TD Ameritrade, I believe it is $125,000 is what you need to qualify for portfolio margin. I think that's what the minimum is these days, but I'd have to check. What's going to happen is that sometimes you will overtrade, meaning that you sometimes will get a little bit more speculative than you really should. So I would caution you, if that's your entire net worth, I would recommend getting portfolio margin if you qualify, no doubt about it, and if it's outside of an IRA. But be cautious as you're going through it. We have a lot of clients that actually just call us and they trade for our commission rate, and we charge a percentage. We provide advice. We do things like that. But one thing that I always caution them on is not to over leverage themselves. If you have the temptation to over leverage, then that's oftentimes where you get into trouble. So to get back to it, in terms of the amount with which you can use or what amount you should use for iron condors, you can use any amount. But if you really want to do it right, I think you can do it with a $5,000 to $10,000 account. And the reason I say that is that you can have multiple positions and do different things. But by all means, if you have $100,000 or $125,000, contact your broker and see what you need to qualify for portfolio margin. And before you even take it or accept it, understand what you're getting into first.
You probably figure this guy's blasting out iron condors, even wide ones. Probably going to have at least probably 10 grand, I would think, sitting around. Otherwise, you're getting pretty small on what you can do, and you're kind of really limiting yourself a little bit. So you got to figure you're somewhere in that ballpark at least, and then you clamber your way up to that level. You think you're right. It is getting to be 125 at a lot of these firms now. They're inching that up. Hopefully they don't keep pushing the yardstick even farther down the road. Anything to add, Mr. Sebastian, Mr. Greasy Meatball?
Well, when I hear a question like that, it makes me think that the person needs to educate themselves a lot on portfolio allocation, on trading strategies, and on risk control, because a question like that is inherently dangerous. How much money do I need to do this? That's like the question. When you ask a contractor, how much is this going to cost? They start licking their chops. So when I hear a question like that, it sets off all kinds of alarms in my head that this person needs to spend some time really educating themselves on risk control and portfolio allocation. So, and then in addition, I don't think there's a ton of edge in wide iron condors. So, my general answer is don't. But if you're going to do it, spend some time on really digging into how to manage a book of trades.
Yeah, wide iron condor really kind of defeats the point. You're kind of really picking up pennies at that point.
Yes, you're picking up nickels in front of a freight train.
I'm the other way. I'm an iron fly. I go all in. I don't go wide to that point. It's like, why are you even bothering?
Yeah, I agree with you, Mark. But I'm not a big fan.
But that's why when I get questions like that, I always kind of revert to my stock answer of portfolio margin, because it's a threshold that people have to kind of they have to kind of strive for. So there's a bit of a barrier to entry. So if our friend here is just dabbling around with $5,000 in the account, he may be persuaded.
You were probably sadly unshocked by the number of people that have portfolio margin, that get clearance, that think.
Yeah, they're still idiots. I agree. There's legions of those out there. We profile them all day on the odd block.
So I would really encourage this person. And a question like that means that there are lessons necessary in risk control and in portfolio allocation. And so before doing anything, I would encourage the trader to spend a little time.
Here you go. Take that $100,000 you hopefully have in your account. Call up Uncle Mike, help him manage it for you. He won't put you in Apple anymore, so don't ask him about that. And then take a little bit of that, peel it off, and take some of Mark's weekly webinars and stuff, and you'll be off to the races there. What was he or she's name? Vegan, I believe. Oh no, Cab65.
So and I don't want this person to think that I'm trying to insult them. It's just and they may be brilliant. It's just a question like that is a red flag question.
Some also could be the medium. Someone's coming by a Twitter, and the room for nuance is limited.
Exactly. It's like exactly. But it's just like my kid being like, "Hey, what's the biggest knife I'm allowed to handle?" Immediate red flags.
I like that. That's a good one. I might borrow that.
How old's your kid, Mark?
5.
Okay. How so?
The answer is machete.
So yeah, at least 6 inches, I would say. Yeah. Yeah, there's a premium of length to age when it comes to the knife gauge. I mean, look it up, knife gauge. Everyone's seen that, See, my son was handling a 30-06 at age 7. Well, there you go.
There you go.
That's the St. Charles life.
That's a big weapon for a 7-year-old.
Yeah, that'll put a bruise or two on the shoulder.
Jeez. How about start him with a 22? Jeez.
Well, yeah, that was back when he was 4. I mean, come on.
I could just see him with like dual pearl-handled revolvers out there in St. Charles. I love it. Good stuff. Speaking of stuff,
like the Nick Cage ones from Face Off.
I was thinking more like Patton, but that works too. Sure, whichever way you want to go. All right.
So, yeah, Mark. I actually on Facebook. Every once in a while I like to make like joking random questions, but on Facebook,
I refuse to believe it, sir.
Last week, on Friday night, Lauren was out of town, so I got the Netflix to myself, and I saw Face Off. So then that got, so obviously I watched that, and then I got to thinking, I'm like, okay, well, if you only could watch one, The Rock, Face Off, or Con Air, what do you watch?
The Rock, far and away. The Rock is
I'm a Con Air guy.
The Rock is my favorite of all.
Air guy.
Any, whatever, that Michael Bay oeuvre, that is far and away his best.
You must give that order. I cannot give that order. Yes. You must give that order. I cannot give that order.
The Rock is a seminal action film, and for no other reason than it has Sean Connery still reasonably with it and viable doing stuff. That movie is fantastic. I could go on about The Rock forever.
Good. Yeah, I think I'd go with The Rock.
Con Air,
pretty good.
Con Air is all right. I mean, they all have ludicrous premises. Con Air might be the most ludicrous of the bunch.
But, you think Con Air or Face Off?
Oh yeah, Face Off too. That's right. They're changing faces. I forgot about that. Face Off
is.
My hierarchy for that would be definitely The Rock, and then like 50% below, Face Off, and then way below that Con Air.
Oh, really? Okay. All right. See, I'm Con Air, The Rock, then Face Off.
Tusa, arbitrate this for us.
Rock, Con Air, Face Off.
You got to go with the
right.
Just for the welcome to The Rock. Welcome
so there you have
to
it.
The
Net
Rock.
ranking is The Rock, Con Air, Face Off, based on what we've discussed.
See, now I blame you because we failed to answer another listener question because we're going into The Rock, but also now I want to watch that movie again. That's how much I like it. I love The Rock. Welcome to The Rock.
Watching.
Now you've planted that seed. I'll be watching that sometimes. Is that on Netflix? I hope it is. Listeners, send in. Let us know.
So hopefully soon.
Get rid of everything else. Michael Bay on there. I'll take just The Rock. That's all I need. That's a fantastic. When he's like there with the flares at the end and the planes are coming in. High drama.
He shoves the needle into his heart.
Yes, Sean Connery destroying half of San Francisco in the biggest ad for Hummers ever made. You can destroy half a city and your car still runs. I mean, so many great parts of that.
All right, one last question. All right, between The Rock, Face Off, and Con Air, how many innocent civilians were theoretically killed?
Well, Sean Connery killed about 200 by himself in that one rampage through the city. I kind of blanked out on a lot of Con Air. I disliked it so much.
Con Air, they land the plane on the strip.
Oh, they landed in Las Vegas. Yeah, so a few hundred probably died there. Are there a lot of civilian casualties? And I mean, only prisoners. They don't really count as civilians, do they? In Face Off?
Oh, yeah. Well, the strip isn't exactly closed down when they land that plane.
No, but in Face Off, there's no civilian casualties in that.
Yeah, they blew up. Remember, they blow up that building.
Oh.
But yeah, no, Face Off is probably the lightest of them.
Face Off was the moment I realized that John Woo style wouldn't really translate well from the Hong Kong films that he was known for to American style movies. He was kind of a one-trick pony. But still,
that one worked.
Still, interesting stuff. Listeners, I'm sorry. Blame Mr. Sebastian for derailing, even though I could talk The Rock all day long.
Yeah, I think they're going to be happy about that one. Listeners, we'd like your opinion on this. So Mark's going to put out a poll with this episode saying, which is the best Nick Cage.
Really quick, do your best Welcome to The Rock Sean Connery impression.
Welcome to The Rock.
Tusa, you do one too.
Welcome to The Rock.
Whoa. Very aggressive. Welcome to The Rock. So, listeners, you decide. Like somewhere in the middle there. I don't know. Interesting stuff. That's all right. We got to move on. That was good though. The Rock. Now I got to watch that again. I blame you. I think I have that. If it's not on streaming, I have probably the DVD. No, I don't think it's even on Blu-ray. It's been so old. So probably I have the DVD floating around somewhere. I'll go old school for that. Speaking of old school, it's time for us to do our final segment. It's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, listeners, Around the Block, you guys know the drill. This is the portion where we tell you what we're watching for the week to come. Speaking of things we're watching, the Apple numbers are still kind of hovering right around 134.5 right now in the after hours, so Uncle Mike is correct. A bit of a resounding meh, certainly compared to what we've been seeing of late. There was a little initial vacillation. I don't know how many of those prints are actually verifiable in terms of how much size is actually going up at the ends of that range. So if you're a premium buyer out here, it was pretty expensive to begin with. You kind of knew that, and looks like you may be getting the short end of the stick out here in terms of the week to come. We got Ford, a big one for a lot of you guys tomorrow before the bell. So hopefully you guys put on your positions ahead of time. That straddle compared to the 720 or so we saw in Apple, that straddle about 50 cents. Of course, the stock a lot cheaper as well. I was expecting about a 3% move versus about a 5.5% move out in Apple land. We'll see how that comes to fruition tomorrow. We also have JetBlue and Twitter coming up tomorrow, which is Tuesday. Wednesday, Time Warner, Exelon, MasterCard, Yelp, and Goodyear, everyone's favorite names. And then Thursday, LinkedIn, I know a name a lot of you guys are watching, as well as Gilead Sciences, the name that's been on the odd block a few times. And then Friday, Chevron, and a few others. So a few interesting names coming up. Uncle Mike, any last comments on what's going on with Apple, as well as what you're watching for the rest of the week?
So far, the resounding meh has held up, so that's what's happening. And the only thing I'm watching right now is 2120 on the S&P. We went over it for a little bit today, and I thought I was going to have to go from my normal bullish stance to more bullish, but I'm just bullish right now. So I'd like to see us make some new all-time highs, but we still have not as of yet. We have not closed above one as of yet. So really staring at the S&P right now. We've been teasing for a while, but nothing as of yet.
I will point out for the listeners that 136 print, you were briefly out of Apple, sir. If you hadn't put on that 138 call, you would have been called away. So you were briefly out, but now you're back in, like they say in the Godfather. Mr. Sebastian, your turn, sir.
That's a stretch, but okay.
I just want to put it out there. Let it simmer in your brain for a bit. Mr. Sebastian, what are you watching for the rest of the week, sir?
I'm just going to, we got these earnings coming out. I don't think they're going to amount to much. They never do. But, earnings and, that's really it. I think we'll probably get a little bit of some sort of decent. I think by the time we're done this week, Mike will get his 2020 that he wants, his 2120 that he's looking for. I'll say that.
There you go.
Maybe on Thursday when we meet again.
There you go, Mike. Mike, be getting the love you're looking for. But unfortunately, listener, that's all the love you're going to get from the Around the Block segments, all the love you're going to get for this episode of the Option Block. Blame Mr. Sebastian for that oh so diverting detour we took. But before we go, as always, let's check in really quick with each of my cohorts here. See what's cooking in their neck of the woods. Mark, we'll start with you. In addition to rewatching the Rock tonight, easy for me to say, which of course we all should be doing. What else are you up to this week?
Just read the blog and enjoy what we put out. So take your time there.
Take your time on the old optionpit.com blog. Check it out. And, of course, check out that trade tags article Andrew wrote up. You can find it there on our site as well. There's a lot of good information in there if you have questions about all the fun stuff we're always talking about here with trade tags. We broke it all down for you. You can check it out there. And Mr. Tusaw, what's coming up in the land of RCM?
Well, a couple things, actually. Just as always, if anyone is interested in any type of portfolio management, feel free to reach out and contact me at mtusaw@rcmfs.com. Also, we do have a variety of events coming up. The next one actually will be in Chicago. It's going to be on May 5th. So it is at 4 o'clock Chicago time on May 5th. It is at the CME facility. So if anyone is interested, go to rcmfutures.com for more information.
There you go, listeners. Check it out. And on behalf of Uncle Mike and the Greasy Meatball, and indeed myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing to the show and for sending in such great questions. Keep them coming, and we'll see you next time right here on the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.